Now I need to check to make sure we go live on TradingView. I think it takes like a 30 seconds. Come on, 4 for 4. The fourth TradingView show. Come on. I know it can go live. Come on. Let's see. Are we live? We are live. We are live. Perfect. Okay. This is the TradingView show, episode number 4, where we are meeting and talking to real traders, real investors who are on TradingView. Today, I get to introduce Steve Dahl to the TradingView community. What's really cool about Steve and I is we met on TradingView. I have seen his name and his indicators and his trading around markets for years. And I'm very pleased to say we just met on TradingView, and the rest is history. And now here we are on episode 4. I think the best way to get started here with Steve is we have to hear about his story. His background in markets is rich with history, and he's in Chicago. And I'm sure he was there when the trading pit was the real deal, not all digital. So without further ado, Steve, I do want to let you take the mic away to tell us how you got started in trading and about your history in Chicago.
Awesome. Glad to be here, Stefan. And it's maybe a little bit awkward that on our first date here live, we have, hundreds of people tuning in with us. But hey, there's a big enough table for everybody. Yeah, I'm Steve Dahl. And as many of you may know or will soon learn, I'm president and founder of TAS Market Profile, our analytics arm of our company. And when I got started in the business, I felt like, so it was 22 years ago. So 2001 was the year. And when I got started was a very interesting time. It was approximately 1 month before 9/11. And we all, of course, have earmarked that particular day in our lives. And our office was in the Sears Tower, the tallest building in Chicago. So you can imagine the already kind of craziness of learning financial markets, starting at a new trading firm at one of the busiest firms in Chicago. And then a month later, we had to evacuate the building, and we ended up not going back to that office. We ended up moving down the block a little bit. But my introduction was just that. And I think it was a very swift reminder at how crazy these markets can be. And this was a commodity trading firm. So already, the exciting leverage markets of commodities and futures trading, throw in, a terrorist event like that. And very quickly it was off to the races. And then I blinked, and then, a few kids, a wife.
Oh, did we lose Steve?
One of the things that I think was really unique about my start in the business, and I'm very grateful to this, is a lot of the ways you learned how to trade. This goes for the floor traders too, which I was not. I was always upstairs on the screens as a trader, which, as we know, given where the floors and the exchanges have gone electronically, it ended up being where everybody needed to migrate to anyway. But it was a little bit of dumb luck because everybody here in Chicago wanted to be on the floor, right? Because that's where, again, what all the perceived big money and the flashy lifestyles and the biggest parties were at about noon in Chicago, and when the day was done. But I started on the screen, and I was wedged between a couple of 3-decade veterans. So I basically had 60 years of experience, elbow to elbow, and I'm talking literally elbow to elbow, touching people. But what was unique about that, Stefan, is that there's things you can learn when you're that close to somebody who's trading, learning their techniques. Technical analysis ended up being at the core of what I ended up gravitating to. And to this day, I'm still, I'd say, 90% technical, because I subscribe to the school of thought that any and all fundamental information, which I know we're going to talk about here, because there's a lot of really great fundamental stories out there in the banking business lately. But we've got inflation, recession teeterings, and I subscribe to the school of thought as a technical trader that any and all that information will be quickly reflected in the price charts, which of course you're getting a little glimpse at of got the E-mini S&P up there. And for me, I think that's why that's important to me, is it allows me to have objectivity more so than if I'm having to make some assumptions about how to digest fundamental information. And I love my fundamental traders. I got some very successful trading friends that are purely fundamental traders, especially in the agricultural markets. And you know, that's what's fascinating about trading is that there's no right or wrong way to do this. It's what works for you. And therefore, if it works for you, that's the right trading method. So the exploration and the hard part, I think, for those of you that are new traders maybe tuning in, is exploring a lot of different methods that are out there, and then ultimately settling into the one that fits your risk capital, your risk tolerance, and then just your personality as a person, because that definitely bleeds into trading as well.
So the one aspect of the story that I have to ask about, especially because of the rise of working from home, trading from home, remote, so being elbow to elbow with traders, to now being able to really trade from anywhere. I have to ask: has the adjustment been easy for you? Do you sometimes miss the elbow to elbow trading pit? Everyone's in the same room, talking about their trading strategies or showing off the trades they're making, versus now maybe a little more focused, remote from anywhere. Has the easy transition for you? Do you miss it? I'd love to hear your thoughts on that.
You know what? I do absolutely miss it. That's for sure. I mean, there's little things I can do. I'll take a little look up here. You can bring some of the tickers to you here to my office there, so it makes me feel maybe a little connected to the exchange in that regard. But there's no replacement for the human trader to trader contact and all the relationships that make trading even possible. Because it's not just traders that make it work. You got FCMs, you've got brokerage, you got broker dealers, you got middlemen that are creating financial products, support people. And one of the things that I do miss, and it'd be just awesome if everyone could get on the same page and have a big get together even annually to do this, is that after the trading session is done, that camaraderie that might be catching up at the dinner and steakhouses in Chicago for sharing war stories about the best trade of the day, or maybe the worst trade of the day if it was a tough day, and just kind of all the financial news of the day, before everyone kind of jumps on the train or heads their way home. I miss it, and I really do.
I have to say, I do love that aspect. I've never traded on a floor or in a trading room like you have, but I have definitely been around groups of traders when they have done their after work dinners or get-togethers, and those are quite fun. And I have learned a lot being on those. I mean, attending those from time to time as well, because you can really see what these traders are all about. And once you get a feel for that personality, it kind of opens your eyes up to, oh, this is who is also trading alongside me, or potentially taking the other side of my trade. So I think it's also really educational in that aspect too, to get face to face and realize, oh, this is really competitive. Some of these people are really smart, and they also maybe have like a great personality, or you're just having a nice time. I do miss that actually as well. So going
It
so
is.
yeah.
There's probably plenty of bartenders in Chicago that deserve either some hush money or can write a very good book someday with the stories that they've heard secondhand. That's for sure.
That's I can absolutely see that. And being in Chicago, you were telling me about your commodities background. I'd love to hear, and for our listeners as well, because commodities
Wonderful.
trading is definitely not the most popular market. It's definitely popular, but you've seen the rise in cryptocurrencies or equities, and how retail investors and traders gravitate toward those two markets. So with that being said, from a commodities expert like yourself, I'd love to hear what you think of that market, and that's your specialty now. Just maybe give us some insight on why it's so interesting.
Absolutely. In fact, the name of one of my companies is Candid Commodities, as the name suggests, honest commodities. And yeah, so from 2001 to early 2015, I was in the futures trading business by profession. So in that length of time, obviously, you learn an awful lot about how commodity markets work, whether it's great gold, grains, energy markets, or everywhere in between. They all have their own little personalities. And one of the things you're absolutely correct about is that more mainstream, of course, is just trading the stock market, right? And I think there's an education gap for traders out there to learn about how there's so many similarities to what you as a trader have learned in stock trading that you can transfer in terms of characteristics and skills. And then, of course, there's a little bit of information, of course, differences between trading leverage futures markets. And what many people, I think, are surprised to learn is that, especially given the nature of commodity futures, they're traded nearly 24 hours a day. There's tax benefits. You get a bang for your buck. A dollar in commodities goes further. With of course, with that leverage comes, of course, the prudence required to not let it work the other way against you. But also, again, you have a quick and easy access to also short sell and so forth. It's very easy to do that. There's no additional margin requirements. There's no PDT rule. So, in fact, in commodity futures, you have lower margin requirements. You require less money in your account than when you day trade. So instead of being kind of penalized or having the rules of the PDT, so there's a lot of different things that certainly is worth any stock trader or any trader at all to at least investigate the different benefits of perhaps adding futures trading to your mix and arsenal of markets that you might be considering. It's not like you have to choose one or the other. As a trader, you kind of evolve over time. I know I certainly have, and you add instruments that maybe plug an exposure or diversification gap that you have in your trading. So and obviously there's companies and people like myself that have made it their mission to get the word out about learning to trade commodities through community and sharing, and of course technical tools that make you confident, to just as confident as you'd be to be trading Apple and Netflix. The nice thing about a technical method, which is what I do, is you can apply that technical method to virtually any financial instrument and still have the confidence of whether you feel like there's probabilities for the market to go higher or lower.
So I didn't expect this to come up, but it's fascinating because I didn't know this. You mentioned the pattern day trading rule not applying to commodities. So I will say, there's a lot of new traders and investors out there, and PDT is not actually the most understood concept or rule. And even I am not fully aware of its exact specifics. I have a general understanding, but I did not know it varied between asset classes. Could you tell us more about what that means and not having that for commodities? Now, I'm not saying it's an advantage or a disadvantage, but in some ways it really is, and there are some very interesting aspects of that. I had no idea.
You know what? You're not alone. In reality, like I said, a lot of traders, they come into the market because, a family or friend oftentimes had some influence on, hey, you should check out how to trade stocks, and let me show you my way I do it. That's a pretty common way someone gets started. And then what we see happen sometimes is traders just stay laser focused in that one area. Because let's face it, there's only so much time in life to dedicate to the screen and life and um, what have you. And it takes time to explore and kind of put your tentacles out there and see what's out there. But just to give you a contrast to how it works, so as you probably know, if you're going to actively day trade, right, you need to have $25,000 or more in your stock account in order to do that. But in commodities, the way it works is you typically have to put up what's called an initial margin, which is kind of like a performance bond. So unlike when you buy a stock and you need to pay out of your cash stock account X number of dollars times X number of shares, right? In commodities, they say you're going to put up a certain amount of money, which means you just have to have it in your account as kind of a good faith deposit. All of this is done automatically. This is not like something manually you have to be figuring it out. It's all done on the platforms in real time or near real time. And basically, as you speculate whether you buy and get long or take on a short position, it does not matter to the commodity futures in the commodity futures markets. It's just as easy to be a buyer in bullish markets as it is to establish a short position as a seller first and buy back later. As long as you're in general buying lower and selling higher, and vice versa, starting the transaction selling higher and buying lower, you'll make the same amount of money. Or, of course, when you're wrong, you'll lose. But yeah, a lot of people are not aware of that. A lot of people are also not aware of the benefits tax-wise as well. And this is a great time to be having this discussion. 60/40 long-term, short-term is
Wow.
a huge benefit. And I'll tell you what I like when it comes tax time. Instead of having to keep a huge log of all my transactions in the equities market, in futures, you get one statement, 1099, that basically will tell you your net profit or loss, one number, and it goes in one little place on that tax return here in the States.
Okay.
So literally just the net, how much you made or how much you lost, one number, no matter if you
So
did a million transactions.
I don't know why I'm spending so much time on equities when I hear this, because a lot of this is like these are the biggest headaches of trading. All of this. Are there any
Yes.
other tax advantages of trading commodities? I did not know this either. I thought they were all taxed long term, short term capital gains. No, I
No,
got to hear about this. Fascinating.
it it's tremendous, and depending on how much you trade, actually, the savings can be quite substantial. And everyone's going to be a little different in where they um, in where they fall in that department. But simplicity of taxes, again, one simple number you get at the end of the year on typically a one-page thing, no logs. The improvement on the taxes is basically, from a taxation perspective, commodities are set up to be very accommodating and encourage the liquidity of the retail trader, in addition to, of course, algorithmic volume and institutional commercial volume and producer volume. Again, farmers, remember, use these markets, these agricultural markets, corn, wheat, beans, to hedge when it may be a good time to take their grain to market in cash, and they can lock in tomorrow's price today if they feel it's advantageous to do it. In fact, that's how these markets initially were born. A long time, I mean, centuries, over 100 plus years ago. They were originally built as risk mitigation vehicles, and of course, they've grown into being speculator vehicles as well. But the speculator plays an important role to the liquidity that ultimately still benefits. At the firm I was at, you may have heard of a little company called General Mills, right? That was one
Mhm.
of the customers of the firm, and they use the commodity futures markets to forecast out where they think prices are going, and then you can use futures contracts to take advantage of running operations on what they expect markets to be doing in the future, but you get the opportunity through the exchanges to lock in today's price. So it's a really unique scenario, that if you think about it as a person, you try to do this in other areas of life too, right? Think about if you go to buy a car, if you think that you can buy a car today, and there's a way that you can maybe secure the interest in a car, or maybe this is in real estate, you could secure an interest of a particular type of real estate at a particular price today, even though you're not ready to make the transaction. That could be advantageous if ultimately prices maybe move in what would have been not to your advantage. So they kind of operates the same way.
Yeah, fascinating. And actually, the historical aspect of commodities is actually really cool and underrated. I've known this, but when I was listening to you, it was going through my mind that, oh my, that's right. Commodities are probably the oldest trading. I mean, maybe some forms of, well, you could say currencies, but the commodities are being priced in that currency. I mean, it's definitely older than equities. Commodities trading has been sort of a foundation of modern trading. Without it, I don't think we are even where we are today. So that I forget how interesting that is.
Yeah, the barter. For a long time, people have been bartering, right? Before there was even formal currency, go way back when. And what were they bartering? They weren't bartering the euro currency yet. Again, go back even before that. What were they bartering? Cattle, things you can eat in exchange for things that had tangible value. Precious metals like gold and silver, very popular for commodity speculators, which is something we had talked about recently too. About 20 years ago, and 20 plus years ago, when I started in the trading business, there was actually a really good opportunity for a speculator when the stock market was getting beaten up and bruised. A little saying that would be said in commodities trading world would be when there's blood on the street, Wall Street, the futures traders come to clean up, if you will, and because and that comes back to some of the benefits of being a commodity futures trader. Remember, when the market's going down, a lot of people in stocks, and our current market condition would be a good example. They kind of don't know the techniques to be profitable or manage risk when the market's going down. Talk to so many people in these markets right now that have, I'm not picking on financial advisors, I've got them too, but sometimes the financial advisors are a product of just they know what they've been taught, and so that's what you get for advising when markets are real tough. You'll hear a lot of hold it for the long haul. Hey, let's add to bring the cost average down. You get a lot of advice that is really encouraging you, well, in a roundabout way, to not take your money out. And if you think about the political front, even, we went through the pandemic together. Hey, we made it, right? But there was a lot of political forces that, if you look back in hindsight with the amount of money that was transacted into the marketplace, was it a worthy bull market during a pandemic, or was it manufactured? If you sat in our trading community and chat rooms before we saw the market start getting ugly, you'll hear me talking a lot about how this is not sustainable. You cannot give this much money out without it getting into the right hands, because eventually when it stops, you're going to have a problem. And there's a lot of other factors, of course, too, that have landed us in this precarious situation we have ourselves in this economy right now. The point being, if there's a big takeaway for anybody listening to the show here, is that know that there's vehicles, strategies, and tools that can operate in virtually any market condition, whether it's a bear market or bull market, a recession. I don't even want to say depression. Gosh, I don't want to be getting negative like that, but let's just say in any challenging environment, with as advanced as these financial markets are, there's a tool, a market, a strategy, and a way that you could be profitable, even not even just mitigate some of the risk. You could be profitable. And for some traders, their strategies work exceptionally well in bearish markets, even better than when the market's strong. So you see how you can put this together, where it's like you could be a stock trader. You don't have to forget everything you've learned. And if you've made some progress there and you've built a strategy, absolutely keep that. But having a little sliver, in fact, if you're looking for a little recommendation, and I give this, as is, if you will, I don't think you should replace your stock and equities based trading whatsoever. In fact, I would recommend, it would be only as little as 10, maybe 20%. So it's a smaller amount, but because you only have to put up a very small amount of margin to transact business in these futures markets, that's for many people going to be just plenty.
So
margin requirements can be like $50 in some cases of some of these micro stock index products. $50 you need to have in an account.
One thing I want to go back to that I think is really important, because I've heard it my whole life, it's that there's sometimes this stereotype that equity traders are the dumb money. And earlier in what you were saying, you were talking about how when there's blood on Wall Street, futures traders come in to clean up the mess. And that's been on my mind since you said that. I do want to hear, we're not saying any asset class is smarter or better than the other, but I am curious if you do notice a trend that commodity traders are sometimes maybe more, do have more sound risk management, whereas in the retail landscape, someone comes to one of these fancy apps and they're suddenly, I'm buying Netflix, I'm all in on Netflix, and it kind of maybe makes for a quicker disaster. And I'm so curious to hear your thoughts on that with your experience in commodities. Do you find that maybe equity investors are a little not as careful, or maybe have some bad habits from the get-go compared to the commodity markets?
Oh boy, you're really trying to get me in trouble here. Good thing I'm a safe distance from the viewers. All jokes aside, I look at I've seen the evolution, and being a fintech company myself, I have a good grasp of the players, and I also have a good grasp of how the players all have skin in the game. In other words, how they make money on basically every transaction that happens. And you're exactly right. In recent years, the advent of, apps like Robinhood, and I'm not going to pick on them. They've been picked on plenty lately. But if you think about what they've created, in contrast to, say, like what TradingView has built over many, many years, a very deep social platform that has thousands and thousands of sharing and technical analysis. You go into some of the other platforms, and they're really just built very simplistically to encourage almost anybody to feel like anybody can hit the buy or sell button. And you only need a simple line chart. You don't need anything more than just a buy sell button on this little app, and away we go. And there's lots of money that's made in that simple model. And so I appreciate why they do it, because I feel like a lot of people are intimidated by financial markets. When you first look at these screens, and we haven't even turned around and looked at some of the analytics on my screen right now, but it can be intimidating when you first look at a trading screen. And that's because behind every trading screen or technical tools or method, remember, there's a set of rules. So if you don't know the rules of the road and you get in your car and start driving, the red, green, yellow stop signs, railroad tracks, you'd be frightened as well, wouldn't you, if you didn't know any of the rules? Trading's a lot the same way. So in answer to your question, a long answer to a short question, yes, I think the industry has oversimplified what the prerequisites are for someone to be a successful trader. Anybody can trade. I think a lot of people blew through those checks that they got in the mail during the pandemic. Sitting at home, nothing to do. It was one of the few shows in town that was open. Sports weren't even on. It was literally one of the very few things you could do other than learn how to play the violin or piano or, work out, try to get a Peloton at the time.
I totally forgot that sports weren't on, and I love the analogy of just if you got in a car without understanding any of the rules, and that's not going to make for a great outcome for anyone. So fascinating, and I'll say to the charts, because you're right, we haven't gotten to the charts. And I want to talk about your screen and your watch list and take us even back to financials as well. I mean, sorry, commodities. Not. We may not even get to financials because there's so much to discuss. And we were talking about commodities, and one interesting aspect of commodities, and you and I had mentioned this on our phone call as well, is commodities, and then one of the big trending topics. Everyone has a comment on this, and for good reason. We just heard from Jerome Powell the other day, is inflation. I don't know if there's some charts you want to show, or if you have thoughts on inflation, if commodities can sort of give some forward look into maybe what might be happening to inflation. I'd love to hear what commodity charts you're watching, and if you have any macro thoughts based off of those charts. I'm all ears. I just think it's fascinating. Lumber, corn, anything, gold. Just give us the whole walkthrough.
Sure. That sounds good. See, now we're getting into my sweet spot. This is where I really shine, and this is kind of what I do when, using live markets as a learning tool is a tremendous value, as anybody in the community knows. And the value to hearing somebody give a little bit of commentary as you're looking at the very same screen share that they're looking at is so valuable. You're basically getting inside the brain of the trader when you have the opportunity to do that. So I'll give you kind of like a little run through of some of my favorite markets and commodities, and just kind of talk through a little bit of what you're seeing here. And certainly, on the show, it's not my goal to teach you everything about the method here. But yeah, this is a market profile based method, and essentially what we do with the method is we take volume, which, let me do this here so you can actually see volume. And this is the S&P, and then we're going to get into commodities here. Let me show you volume. See how volume is listed down there at the bottom? Here's my drawing tool. We all know that when the histograms are tall like this, those are high liquidity zones. And so for people that trade off of volume, what you're trading off of is an understanding that high liquidity areas validate moves, right? And which is a good start. Okay, so it's important to understand volume, but what market profile traders do and volume at price traders do, which is what I do, is we flip it sideways. So we take this and we kind of flip it this way, and it ends up going like this. Now you say, what's the big deal about doing that? Well, the big deal is that down here in volume, you don't have any idea at actually what specific prices during that move all the volume is aggregating. So you're missing an important part of the equation. As a trader, knowing where all of those meeting of the minds between a buyer and seller are is super valuable information because it tells you where the market wants to be. Well, let's look. If I draw arrows this way, notice how we're oriented this way now, and when these areas where we see the market have the most amount of volume, look, you can see right here, and look what the market does when we get into that area. We make it red so it's easy to see right there. That's one of the unique features of our volume at price. And then we put these yellow horizontal lines there so you know that those are the most actively traded prices. So if I were to draw a line way over here, it looks like just under 4,000 in this particular case, the market had a tough time getting through that zone at that moment, and that's why it retreated. If you go back in time over here, let me show you right here. So market came down. We also have some additional tools that help to make this easier, like these three lines right here. These are what we call dynamic value areas, or TAS boxes for short. And what we do with these is when we start seeing the market close above that top line, we want to start shifting our focus into being into bullish long side trades only. Okay, so anybody that was on this prior short side, you're out of that trade now. You're looking to trade this direction. Okay, so when we start coming back inside the TAS boxes levels, these are good profit taking zones right here. And we even give it a little different color coded on the price bars too, so you can see that. But if you look at this here, most recently, we've started to close back down below that green line, which is what we call the demand line. So when we're down below the green line, we're short. When we're above the red line, we're in long positions. So it's been a nice short side trade here. If you can see this most recent one, about 40.15, the market's 25 points lower in this particular example. But let me bring up some physical commodities, because I think a lot of people are interested in things like, look at gold here now. And this was one of the things we were talking about, Stefan, where it was like back in the day, you used to be able to have a nice trade that when the indices were getting beat up, you could make a trade, get long gold or silver, and it would be a great opportunity. But now many times they move in the same direction. So you really have to treat them not as a relational play, but you have to trade them individually with the chart pattern. We could do this in any different time horizons too. So if you want to get into big picture, like, let me give you an example, the daily gold here. We could see if we go back to, this is March 10th in this particular example, but look what happened at that key moment on March 10th, which is not that long ago. It's just a couple weeks ago from now. We got that pivotal close back above that top supply line. Again, the red dotted line. Okay, we paint those right on the chart for you so that you don't have to figure this out. Now, when the market makes that run up higher here, look what happens. It hits this high liquidity zone, and that's where it goes sideways for a period of time. So those are going to be decent places to be going into profit-taking mode. The way we want to transact with a market like this is after you're long, okay, so I'll put an L there, long, we want to put stops over here, okay, down below your technical lows, down below those three levels. But then look how new levels form. We want to come up, 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 up. A good little place to put a stop would be on the other side of that yellow line that you see. Not the one I drew, but the one that you see already painted there. Because remember, that's a really popular place. That's where the most volume has transacted, and that serves as support. So those of you that understand support and resistance, this is really just kind of a more intuitive, adaptive way to determine really good support or resistance levels around liquidity, which you don't see by volume by itself. So kind of a big part of my mission in, over the last 20 some years is to teach people that understand the value of volume to understand it as a valuable ingredient to volume at price. So if you don't ever make that segue, again, you're not going to be able to see that at this particular point right here. That's where all the liquidity is. The market is telling us at this zone, this about $15 window, the market likes to be there. And time again, it's going to run into, look at their resistance. I'll put an R when it came there. Even it hit resistance here a bit when it made that run up. I'm going to show you another market.
And by the way,
yeah.
on gold, really quick, is that 52-week high? Is that what's happening with gold right now?
Yeah, look at it over here down the bottom right. which is so easy, of course, with TradingView. You can see that it is right there near it. That's for sure. Look right here, down the bottom right down there.
Wow.
You got that little feature that shows you. I mean, yeah, it's good to be in gold right now. Over two
So
thousand
interesting.
bucks an ounce.
Do you have any,
Um,
being a technical trader, and I'll say this is so important for technical traders listening everywhere, there's definitely that aspect of don't, you're a technical trader, you've got your system, you've been doing it for a very long period of time. Do you ever let news stories or opinions or Jerome Powell meetings have you sort of confirming this breakout? So like you're trading gold and you say, oh, of course it's going up because of inflation worries or maybe some sort of supply squeeze that's happening globally with the transport of gold. Do you ever combine the two, or are you mostly just saying, hey, I am a technical trader, this is my system, great that the news is saying that, it makes for great chatter with friends and family, but I'm just sticking to the system? Do you draw that divide, or do you combine them at time to time?
what I'll tell you, the more you lean towards being a technical trader, um, the easier it is to be a technical trader. What I mean by that is it takes a lot of work to be a good fundamentalist, right? I mean, you got to read a lot, and then there's also one of the little kind of things that anecdotes I tell people to do to kind of understand the problem in financial media. And it may not be popular for those in financial media to hear this, but I know, having our products on the Bloomberg terminal as well for our professional user group, been through the office on Lexington there, and we go up there and they're filming all the shows at Bloomberg. Not to pick on them, but they you can easily go online and type in, let's say, gold. Since I got there, gold bullish, you'll find a really nice, well-written article that makes you feel like, wow, I should be bullish on gold. Well, go into Google and type gold bearish, and you'll find another analyst that has a very compelling story
Amazing.
and perspective on why you should be bearish gold. And again, anyone could do this on Google, and it does is it makes you realize that you can find whatever information you want to support your your theory, and that's scary as a trader because you really want some objectivity. So not only is it a time savings to be a technical trader, right? Fundamental information is a part of the financial landscape, right? FOMC announcements, grain reports, supply and demand reports, all of these things there's a whole schedule out for the entire year. We give customers calendar or access to a calendar so they can see when those are coming out. As a technical trader, it's very important to be aware of those. So you don't want to be in a good technical trade and then going into the FOMC announcement, ruin it all because you fell asleep at the wheel due to a surprise in some announcement like that about rates or something. So I think the best case scenario is a technical trader that has an awareness of fundamentals so they can avoid, sometimes a good technical trader maybe get flat ahead of a wild card news announcement. And then you always can reestablish in the market. Transaction costs are so low right now in trading, you don't have to think twice. In commodities, when I first started, going back, when I was a lot younger, half my age, the transaction costs to trade commodities were substantially higher. I mean, we had some rates for certain levels of service that were $100 per contract to talk to me on the phone. Per contract, you'd pay $100. So if you're on the other end of the phone as the trader, you're like, oh, I don't want to get out of this trade because I don't want to have to pay Steve another $100. Now, a lot of these rates, are sub $1. I mean, talk about, how transaction costs and the leveling of the playing field and access to data through obviously fantastic platforms like TradingView. I mean, it's never been a better time to be a retail trader. You have a lot of the same tools, access, data, and so forth that even the professionals are using. Right at your fingertips. It's crazy.
I totally agree. It's and it brings us back to the commentary too about some of the ease though as well. It's almost like it's never
Yeah.
been a better time to be a retail trader, but it's never been like a more dangerous time to be a retail trader. The other thing I
Totally.
like too was your comment about news. I needed to hear that again. I had totally forgotten just how many news stories there are and how you can find anything to fit your narrative. And it sort of actually had me thinking of that famous quote, which I'm sure you're familiar with, which I think is, show me the price and I'll tell you the news. And
Yeah.
that's always a nice reminder for technical traders. And I don't want to take our attention
Yeah.
off the charts because I was having a blast watching you go through your system, and
Yeah.
so the gold's fascinating. Oh, now we're talking. Yes, and I love the way you have your watch list set up. That is super efficient and easy to follow. So now we're on the grain section.
Yep.
ZC is corn. We're looking at corn now.
Yep.
Yeah.
That's right. We're in corn here right now. The Z just means electronic, and C means corn. I'm on a daily time horizon right now, so I'm going to go down just a little bit shorter term, like a 30 minutes, so you can see some of the day trade breakdowns. Again, you can obviously appreciate in my technical approach here, kind of what's going on here, so we can see in this zone. Market gets choppy when it's in there. The biggest moves are when we get outside of these zones. So you can see we make the color of the background even match the directional bias. So red background means bearish, green background means bullish, and then the color of the price bars are also to match. So it's a real nice opportunity to look for bearish when you see red color background, red color bars. You trade that way. Green color background, green color bars, trade bullish in the suite. So you can, if we come over here to the hard right edge right now, you'll see that the corn market is down below the 632.5 level, and it's easy to see red color background, red color bar. Shouldn't be long. That's the first most important thing to do. So many people marry a bad position because, and it drives me crazy when I hear this, that I don't want to take the loss, so I'm just going to keep it. We hear this out of a lot of stock traders too, right? I don't want to realize the loss, so I'm just going to keep it. But it's a bad trade. And we're seeing a lot of things. Like, let me give you an example. Let's go look at Silicon
By the
Valley
way, I am guilty of
Bank.
that. I'll just come out. I'll say I have absolutely kept a trade on because I said, you know what, I'm just
Yeah.
going to save this for another year for tax
Yep.
purposes. But hey, I've been trading for 10 years, but I'm still a rookie in a lot of ways. So, but yeah, let's go through Silicon Valley Bank. That is interesting, and I mean, this is one of the biggest stories of the year so far. So curious to hear your breakdown of the price action.
It is. I think it's been a rude awakening of still some of the vulnerabilities that you kind of forget about, I guess, when times are good, right? And it couldn't have come at a worse time for people that already are feeling quite shaky and vulnerable in this economy to also feel like, maybe putting some cash under the pillow or the mattress is a better place than my local community bank, which is, don't go do that, please, if you're watching. Or maybe you should do that if your bank's going to be the one where they draw the line that they're not going to assist. I don't know. So I guess you got to make your own call on that to disclaim myself. I don't want anybody saying that I told them not to get their money out of a place. But here's the point being this. Technical method. Now we're into stocks. Red color background, red color bars. This is all technical. Okay, this is analyzing that volume at price, and we're drawing the levels right here so you could see we've segued from commodities now to stocks, and you're able to take a technical method to trade this. A short seller on this could do the following. This is one of my favorite techniques to manage risk. I'll share with you. So we look for short positions as we close down below. It's a little hard to see because it's scrunched up there, but you look for short positions when you start closing down below that bottom green line, which we call the demand level. Okay, call it like the bottom of the balance area. So once you get out of balance below that, you want to trade in that direction and not be trading the opposite way. But then we put the stop. So I'll write stop in my chicken scratches here. We want to put the stop up here, and you only need to put it a little bit above there. But as new levels form, we drop it down behind the levels, okay? And you can see the levels are drawn before the market. And you want to know what I call this trailing stop technique? It's called the slinky trailing stop. For those of you of a certain age, you know what a slinky is.
The
My kids have no
slinky.
idea.
Is this your term?
Yeah, the slinky. So that little spring you put
Yeah.
at the top of the stairs, and it was something they, they would give us as kids in the 80s and say, hey, go play with the stairs with this little spring, and you would just watch it flop down each of the stairs, and then you'd have to run all the way back to the top and do it again. But again, in the app age, my kids only know how to swipe left, right, up, down. They don't know how to
Well,
use a slinky.
I love this slinky term. I've never heard it before. And if that's yours, that is awesome because that's a great term. And when you say it, I see it on the steps. I see the slinky going down the
Yep,
steps because there's also a great scene in Ace Ventura, I think, where he takes a slinky down steps. So,
that's
walk us
right.
through the slinky. Very interesting.
Yes, and it works both ways. So I guess it'd be, in a practical sense, you follow. The idea is just following as the new balance areas or what we call value areas or TAS boxes appear. You just trail the stop behind the levels, and in doing so, you're working to mitigate risk, not eliminate it, but mitigate it, reduce it by moving that stop, obviously behind the market. One of the things that and this works both ways. So obviously, if the market's going higher, you'll be ratcheting up the stop behind the levels there. Let's bring up. I wanted to do First Republic too, because we were talking a little bit about that as well. So let me bring up FRC here as well. Zoom out a little bit. So we can see that we still have actually a bearish tone on this particular one. This is a 30-minute time horizon that we're looking at right now. But here's how you use this volume at price to your advantage as a trader. Okay, so let me outline it. Okay, remember what this means now. We're taking volume, and remember, actually I don't have it on screen, but we flip it sideways so we can see this area is just a whole bunch of what I like to call rush hour traffic. So think about you're in New York, right? So
Yep.
at the worst possible time you could be in rush hour traffic. Look, so if the market comes up here, what do you think this is going to be? I'm going to put an R here, resistance. So this, you would not want to be thinking about a long position yet until get on the other side of it. So you actually look to get into long positions up here, because we know that once we get on the other side of what we call a volume congestion zone, think rush hour traffic, there's a lot of activity in here. We make it bright red so you can't miss it. And we even give you that yellow line so you know that that's the highest volume right there. We want, when we're below it, it's resistance. That's why I have an R. But if the market works up here, boom, now we start closing up here. Guess what? Now that becomes support. So I'll put an S there. And so this is how we put together good entries into a trade. When I look at First Republic on this 30-minute time horizon, I'm not interested in being a buyer right now. It's got to come up above there. And so I have a path for the potential trade, but a good trader that's going to do this for a long time and be consistent and be profitable is a very patient trader. And far too many unsuccessful traders, both in futures and in stocks, and the stats are startling. The lack of success rates on futures, 90% will lose money. That means 1 out of 10, all other things remaining equal, has a chance at being profitable. That's startling. So everyone's fighting to try and be in that 10% in building their method. But the problem is that I think far too many traders feel like they're not a trader. They haven't earned their trader letterman jacket if they're not in a trade. There is plenty of days, heck, there's days and weeks I don't trade. If I'm like, this is not suitable for my strategy, my personal strategy, why am I going to leave it to chance? If you've worked really hard to build a strategy that you know works, when certain patterns and rules and checklists are met, why are you going to turn it into gambling where it's just a flip a coin or a roll at the craps table? You've
I'm
worked too hard.
I'm right there with you, and I like that you walked us through the aspect of you already knew you already know what you're looking for, and if it's not there, you're fine stepping away, and that is a really really hard aspect, especially when something like this is happening with these regional banks, First Republic, Silicon Valley. They're crashing. They're all
Yep,
over the
FOMO.
news. Everyone thinks it's FOMO. Exactly. I think it's the trade of the decade. Let's go buy this huge dip. And actually, while you were talking about that, I was thinking about your history in markets from elbow to elbow in Chicago, trading commodities to now digital. What is sort of your opinion on these types of crashes? I mean, I imagine you probably can't even count how many crashes you've seen now to date. But when is it? Yeah, exactly. I mean, is it a moment where you're thinking, oh, another crash? I know my rules. I'm hanging back. Yeah, how do you view these types of crashes at this point?
So I'll tell you, I mean, there's two phases as a trader when it comes to dealing with a crash, whether it be, some of them have been coined, flash crash. We've had a lot of different, they take on a lot of different forms. I know it, one of the things, when the going is good, and what I mean by that, when the market's in a bull market, and this is part of the problem of what happened during the pandemic, because I remember a lot of folks got money sitting at home, nothing to do, came into this stock market, learned to trade for the first time, and they bought anything, and because the wind was in the sail of the bull market for all the reasons we've discussed, they made money. And it's almost like the worst thing that could ever happen to someone who's serious about learning to trade is actually kind of be the beneficiary of a bull market and confuse that for being a good trader, because a lot of those traders are not trading anymore, or they're in sim and they should be. Well, they actually learned to build a method that can survive markets like we're in right now, which are volatile in both directions. One of the, I think, important things to be aware of is within your trading plan and rules, which you should write down. It shouldn't be something that just sits up here in your head, because it's a lot like love in high school and college. Otherwise, it's, minute by minute, you're going to change what you love, what you hate, and so forth. Write it down. But one of the things you need to do is write down that being flat is a chosen position if it doesn't meet your rules, and realize that if you have a strategy that's maybe your strategy is only built for markets going on the long side, you shouldn't be trading a whole lot right now. If you're a stock trader and you only trade the long side, it's probably slim pickings for your strategy. And it could be like that for months, and heck, it could be like that for years. But the alternative is deploy the wrong strategy at the wrong time, and instead you're losing money that you didn't need to. So I think it's all about targeting, being more like a sniper than spraying your shots in the market all over the place. Terrible analogy, my apology. But I think it's having focus on trusting your edge, trusting your rules, and trusting your tools. And I don't, of course, I'd be tickled pink if you go on to want to learn more about the tools we use, but any tools that you're using, the tools that work for you. What you want to avoid, though, and I see this, is the paralysis through analysis. There is such a thing as too many tools. Okay, if it doesn't add value and clarity to the decision, get rid of it. Okay, if it's just on your screen to look cool, get rid of it. It's not helping you. Okay, you're creating, the market is already a noisy place. You create more noise. It does not help your cause as a trader. Okay, less is more oftentimes in trading. Even amongst, we've got 9 indicators on your platform. Many use maybe 3 of them, 3 or 4, because that's enough. That gives the clarity that they need. That's it, and that's awesome.
Yeah, that's speaking from personal experience, and I'm sure other people will probably agree with this too. I've definitely been through the aspect of using many indicators or say fundamental metrics, and over time I always just come back to the same 2 or 3, like you just said, and but that's part of the journey of markets, I think, which is simplifying and finding that perfect strategy or process for yourself. And the chart you just pulled up, super cool, by the way. The
Yeah.
reason why I say that's really cool is most people who I talk to on this show, if it comes to crypto, are always going to throw up BTC USD.
Yep.
You have put up the micro Bitcoin futures, which is, let's talk about that. That is interesting. I mean, what do you see on the chart? Do you trade micro Bitcoin futures?
Mm-hmm.
And interested to hear what you think about this tradable contract in general.
Yeah. So this is a fantastic instrument. I don't work for the exchange. The CME created this instrument, and it's a fantastic way for people that want to kind of speculate on some perspectives they have on Bitcoin, but perhaps they maybe don't have the comfort with cryptocurrency. Um, we'll call it cash, even though that's kind of an oxymoron to say the crypto cash market. But they want to keep their funds at a U.S. regulated brokerage, a
Mm.
futures firm, right? Segregated funds at a U.S. bank. You can still speculate, and you get the benefits that we talked about before. Remember, simplicity of accounting, tax benefits, and all of the things, and the ease of short selling. Remember, no special prerequisite, no margin approval required at your stock brokerage house. Again, you just sell it first. So sell it, and then down here, remember we talked about you buy it when we close back inside the levels. This would be like a cover. So I write C here. So sell, cover. Over here, there was another breakdown. It was short-lived. I want to show you a loser here. Okay, so this thing broke back down, and then it came up here. It doesn't matter. You're out. Okay, you want to get out of that short. That'd be a small loser. But then down, 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 cover, and then if you had a stop, you'd be out of everything there. But then the most recent trade, here you go. The thing I wanted to draw attention to is this actually is a chart pattern. It's one of my favorites, okay? And this will come into play because I have a special surprise for anybody tuning in later. But it's like this. I'm going to outline this here, okay? And what I did is I just simply outlined kind of the red color zones, which we call the value area. It means 70% of the volume has occurred in those red areas. And I'm going to do something that's one of my favorite things to do, which is draw this, okay? And then I'm going to go like this. I know you're wondering, what the heck is this? I'm going to tell you. What do you think that is?
You have just performed some epic chart art.
Yes. So it looks like the side profile of an alligator, doesn't it?
Yes.
So again, big kind of long snout on the top, bottom, big opening in between. So we call this the alligator jaws setup. It's when you have a high volume congestion zone up top, again up here, another one down at the bottom, but then notice where I put the big X, you can see there's no space in here. Look at all the volume comes way down into here. Okay, it's about 5 times, just relatively speaking, you could see it's about 5 times the length of the area in the middle. So look, if I go like this, look at the volume only comes up to like here in the middle. And it also changes color. When you get into this blue zone, we've done this by design, very low volume there, just very small retail volume, very few commercial or institutional traders want to deal in there because they'll basically move the market away from themselves because they trade so big, right? If they put in a big order where there's not a lot of liquidity, they'll move the market, but away from themselves. So what happens is exactly what you see here. So I thought this would be a good opportunity to show you. Markets move fast and vertically when we move through these zones. Look at how tall and long range those bars are. Those are fantastic opportunities to be paying attention to as a trader, because look what we can do on the way down. I'm going to tell you what you can be doing. I'm just giving you an idea here. This is an example, but look, if we start coming down this way, when we run through that low volume zone, which I'm going to circle right here, this often will mimic that right there. So you have a potential, what could be like an opportunity for a short side play in there. So you basically, this is the only time, by the way, those of you in Florida know this already, this is the only time I recommend getting inside an open alligator's mouth, okay? And this would be on the charts here. Don't do that in real life.
I have to say this pattern is, well, having been in markets for a number of years and seen a number of patterns, I love seeing
Pardon me.
patterns like this that I simply have never seen before, and that are very creative. Bring a smile to my face, actually, because that alligator. What was the formation called? You call it the alligator formation?
Alligator jaws
Alligator
formation.
jaws.
Yep.
And you basically use the jaws as your as sort of the well, I'm sorry, no, you use the actual mouth of the alligator as the zone to
Yep.
watch, whether it slices through there really fast or goes right through it really fast to the top jaw
Yeah.
or bottom jaw.
Yeah, when you look at this here, going back in time, look what happened here. It repeats over and over again in the same area. So you want to pay attention to this area, and you would notice how you would not see this if you were just stuck using, say, just volume. And I can bring up the volume again, not to pick on it, because remember, volume is actually an ingredient of volume at price. So let's use this to anybody tuning in here. Let's understand the difference between the information you get. So we know if we have volume that the market had a lot of liquidity during this area, okay? There we go. A lot of liquidity during that. Okay, that's great. But one time it went down with a lot of liquidity. The other time it went up with a lot of liquidity. Where do you get in? Or how do you know? And that's where when we flip it sideways and we again, remember with volume map price, we turn it this way. Now we orient it horizontally where we're pointing to the price scale. So now we can draw kind of a range that we know that when the market's in these areas here, it goes sideways. But once we get into these areas where we look back and there's no volume, boom, fast and vertical, long range bars. Those are going to be your great breakout mode trades, right? And so for those of you that are day traders and are looking for small time windows into the market, these are great little kind of volume gaps to look for, provided you have a mechanism to know when it's time to get in, because the market moves very quickly through there. So you would, one of the techniques you might look to do would be notice how the levels here are already intact even when the market's still inside. But you could work, remember, things like a buy stop order where I've put the arrow. You could have it resting up there and it's just sitting above the level. In TradingView's got fantastic chart trading features. You just can click it, right? You just put your cursor and move it right to that spot, and it'd be a buy stop. So boom, as soon as it comes up, now you're already long and you'd be reaping the benefits of a long position, hypothetically here, of course.
Yeah, fantastic.
And this pattern recurs this pattern recurs in a wide variety of markets. You can go here's in the industrial metal copper, and do you see something? Do you see another alligator jaws?
I do actually, but I see
right
it back
here.
a little back in time. Yep, exactly.
Right here.
I
and
actually
look,
I spotted it right when you said, "Do you see it?" I said, "Yep, I can see it."
look at how valuable it will be to be able to go alligator hunting on your charts from this day forward like this. Here we go. Okay, look at again long range there, and the beautiful thing with our tool, of course, you have the ability to see when the market is getting ready to go through those zones. Look at how we've established that the TAS box is there. So right there, boom, now you're long, moving through the alligator jaws. Look at market goes sideways. That's resistance, right? Short position, okay, comes to an end here. Oh, I'm going to go like this again. Where's the volume gap? I'm going to circle it right here, and look what the market does. Moves very quickly through that zone. So open alligator jaws mouth is not a scary thing on the chart. We in the community we call it going alligator hunting, and that some people exclusively look for this pattern on their favorite markets, and it happens in stocks, ETFs, futures, forex. You could do all of this, crypto.
I want to say on that note of alligator hunting, I think it's fantastic, and I appreciate you walking us through that. I've never heard it before. It's a fun thing to look for, and plug to PineScript too. I think it's possible that you could code in PineScript automatic alligator detections into your script. Which might be kind of interesting.
There is some things that you can do. Again, given the amazing tool that's built right in, you can of course visually see it, but there's ways that we have actually even some private strategies that we have internally. But you're right, through the alerts and again coding and so forth, looking for these particular patterns. You certainly can do that around, especially even the level-based stuff here. And that's one of the things that I wanted to make it kind of very clear that's possible for people. And before we got on today, I'll tell you, I was like, what can I do? Because we're actually relatively new on TradingView, even though we've been around for 2 decades on obviously a variety of platforms and Bloomberg, and so we've got good street cred, I guess you would say. But we're new to the TradingView family, and you've been so good and open arms with us at so many levels in embracing our analytics, our community, ourselves. We brought obviously a lot of folks over that are loving the service and the mobility and so forth. I was like, how can I give something to those that kind of this resonates with, or they want to learn more? And I'm going to give that indicator to anybody that wants it on TradingView. And I've already told the team the way that we're going to do it. I just wanted to show you. We got the name of the tool is called TAS Market Map. So you can see right here, if you come to TAS Market Map, I have a course right there that anybody can have for free. And it's just basically teaching how to use the tools on TradingView, and you can have it for free. It's normally $300. You can get that, and I'll at the your reward for kind of graduating from taking the mini course. Again, it's just going over the analytics, how to use them, how to interpret them, talking about alligator jaws and different patterns that are worth looking. When you complete it, we'll activate your TradingView user ID. Okay,
Wow.
so that's kind of your gift, your graduation gift for completing that mini course. It's about I want to say a little over 2 hours worth of videos that I filmed. So you'll learn an awful lot, and you could be the judge.
I may have
If
to
you
go
think,
check that course out because
yes,
that sounds very interesting, and I bet there's some things that you're doing with TradingView that I don't may not even know are possible because I continually find that even though I've been working for TradingView for so long, there are new tools and features or sort of like
yep,
these really interesting analytical capabilities that have been built that I continually stumble across, and I might have to
yep.
check it out myself. Before we head out, Steve, because I know we're hitting that hour marker, and I want to make sure you get to markets before things close, and you get a chance to check your what your if you have any trades on or any things that you're anything else that you're looking at. I'd love to ask you a sort of like a final sort of end to the show is that if there are new traders and investors watching this show, do you have any sort of, and when you think back to your storied history in markets and you think back to when you first got started, are there any timeless wisdoms that you can share with them?
That's a great question, and I could probably write a book or take over the next 25 episodes of the show on this topic. Here's what I'll tell you, and this is from some of our own internal research and surveys over the last couple of decades, and literally having worked with thousands of customers. So I give you some insight, not only from my own perspective, but others, and it's this. So if you're new to trading, and if you're old to trading in reality, trading is one of the very rare skills that does not choose a particular demographic to be successful. Let me give you an example. You cannot buy being a successful trader. Okay, we have some very high ticket trainings and so forth, and if you're a very successful, well-to-do person, you may buy it, but if you don't do the work, if you don't learn the patterns, if you don't deploy, you cannot purchase being the knowledge. You have to deploy the knowledge. But the nice thing about that is that, guess what? It also is not discriminating this skill, whether you're brand new or you're in a particular financial situation at that time. In fact, that can be some of the best times to be learning. Okay, simulation trading inside TradingView, learning tools. It costs, again, very nominal amount to dedicate time. And so it's also one of the few skills, if you compare it to other skills you could spend time learning, that has scalability. Because when you learn to build a successful trading strategy, think about what's different to grow the strategy, or to, in other words, yield a bigger outcome as you grow. You change a number on the screen. You might be trading more shares, you may be trading more contracts, but the process you go through is virtually identical. If you're a successful lawyer and you want to grow your law firm practice, you got to open up another office, buy another building, hire more people, and you can do that. You can grow that. Same thing. You want to be a successful dentist and franchise your dentist office, again, more building, more people, more thing, lots to manage. Scalability in the trading endeavor is so attractive. Not to mention, of course, you can do this anywhere. So there really is no excuse to learn. It should not have to be feel like it has to be this very risky endeavor where it's do or die. It doesn't. Remember, you can learn to do this part-time. You can do this on your free time. You should keep a secure and stable job while you learn. This is tough business. Okay, remember, you're trying to see if you're and this may be even liberal, the 1 out of 10 that can go on to do this consistently and profitably. So don't give yourself the stress as a new trader of feeling like a self-imposed timeline of within 3 months I must be a successful trader so I can quit my job and fire my boss. It's not realistic. Keep the job, but have a smile on your face that in the evenings you're getting in front of your TradingView charts and you're learning some technical tools. You're taking free course opportunities like I presented to you. You're surrounding yourself by other traders, which is easy to do right within TradingView. But you're learning and you're picking the brain of veterans like myself and others. Little by little, your knowledge bucket gets full before it's running over, and you're going to be amazed at how much you know in 3 months, 6 months, a year, even if it's coming with the patience of, not, putting a lot of money in the market. You're growing your knowledge base. And when the money situation provides a prudent opportunity to take your academics in trading into live trading, in futures trading, you can do that with micro contracts. Literally, some of the tick fluctuations are like $1.25 per tick. I mean, just little itty bitty, and that's the way you should go. You're in a position to test your knowledge without it being a tremendous risk. And that's where, the rubber starts to meet the road. That's when you start to see if your hypothetical academic knowledge translates into real profitability. And then the fun part begins, scaling, right? So you can do it. Again, markets don't discriminate. Some of the most successful traders I know come from quite surprising backgrounds. They're not necessarily, not to pick on Ivy League graduates, but they may not be Ivy League graduates or graduates at all. And in similar fashion, those that seem on paper to have all of the, call it educational advantages or maybe even financial grooming advantages, doesn't necessarily mean they're going to be a good trader. Even though on paper it would seem that their resume to be successful would be that, which tells me anybody can do this. And it really is just a function of being a tenacious learner. So I wish you the best in doing it. I know you can do it.
Steve, that was phenomenal. That was awesome. And there's a lot more I could comment on that, but I just want to say that was awesome, and I'm in full agreement with that. And I found that actually fairly inspirational as well. So no. So thank you so much.
I'll be streaming live with you here too. I promised you I'll be doing some more regular live streams on the channel here as well. So anybody should make sure that they follow our username and you'll be alerted right if I go live, so you can learn for free right within the platform.
Great. Well, Steve, I really appreciate it. Excellent chat. Anyone who's been following along the whole time, I see we crossed 300 total views, which is fantastic. That'll continue to climb. Steve is on TradingView. I dropped his username in the chat. Follow him, message him. He mentioned the course. All of those resources are to you. So it's an open door with Steve, I can tell. Go ahead and send him a message. And I think that does it. And thank you so much, Steve. I really appreciate it. And we'll be in touch because this is a really cool connection. So happy we could meet on TradingView after all. So.
And I owe you a steak when I'm out in New York next month on business, so I'm gonna force you to. Well, you got to show me where to go.
Hey, if you're in New York, absolutely, that is done. Consider that done.
All right, my friend.
Steve, I'll see you. Thank you so much.
Take care until we talk again. Bye bye.
Bye.